Let's take a look at the basics of a trade entry setup. And you'll see through my eyes what I look for. Then we'll look at two other traders trading the same basic setup. And they're going to be taking off positions in multiple areas. And we'll see if it makes any sense or if it's this thing should be called bread and butter, breadcrumbs, and bull. Anyway. So my primary tool as an indicator is a leading indicator. It's called a pitchfork or a median line. And you can see here, we take alternating pivots, a low, a high, and a low, and we'll draw on a pitchfork. But before I draw this one in, I need to have a reason. So let's take a look. We're looking for a change in behavior. And let's look at the behavior pattern of the market here. Here, we come up and then we start to make lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, all the way down here. We consolidate, make this one low. Then out of the blue, look at this, all this way down, the very first time we start to take out a swing high. That's a change in behavior. That doesn't mean you have to get long there, but it does. That's when the bell should go off and say, hey, maybe something has changed here. Maybe the rules of the game have changed. Maybe the market has changed its mind. You don't know, but you want to pay attention now. That's what makes you pay attention. So for me, that's when I go, I wonder if I can draw an upsloping median line because I only buy against upsloping lines and sell against downsloping lines. Why? Anybody know? The trend is your friend. You get 10% statistically for trading with the trend, if you don't know that. So I take that 10% edge every time. You can sell against upsloping lines, but the problem is the resistance keeps going up, so it's called getting collared. Pretty soon you're underwater. There's no point in it. If you want to sell, find a downsloping line. If you want to buy, find an upsloping line. If you can't find an upsloping line, I guess you shouldn't be buying. And I'll tell you right now, if you're charting the Dow, there are days lately when it's pretty darn hard to draw any upsloping line. So if you can't draw it, just don't trade that side. If you can't stand being short, just be out of the market. So when I first see this change in behavior right here, when we took out this high, I now draw in from A, B, C, an alternating set of pivots, a median line, okay? And the median line is a line of force, and it's going to tell me that price is going to oscillate around this median line. It'll run out of upside directional energy at the upper median line parallel. It'll tend to run out of downside directional energy at the lower median line parallel. Now, the pitchfork's great. It's a bit wide, but the most important thing is we're not ready to trade yet because we're missing one thing, which is we don't have a high probability or even a low probability trade entry setup. One thing you need before you trade is you need to find a pitch you can hit, if you will, or you need to find a setup that you see over and over and know the statistics on it. You don't want to just look at a chart and say, I think I'm going to go long. That's going to, in the long run, you're going to lose money. It doesn't have to be this methodology, but whatever methodology you use, you need to find setups that you can see on a repeatable basis, and then you can do the statistics on it so that you know what the probabilities are. Then you need to couple that with money management. You need to only take trades that have an acceptable size stop loss for you. And that's what we're going to show here. If the stop on the trade is too large for you, just pass. You can downsize, take half the position or a third of the position and take a wider stop. But in general, the right thing to do if the stop is too big is just to move on. Look for another trade. Or wait. Maybe you'll get an entry if you wait 3 or 4 bars. Okay? Now, when I first put this in, if you can see, this median line has not been tested, if you will. Price has never tested it since I drew it. We're just starting to head up. Now price comes up. And you can see it stopped right where it's supposed to, at the median line. It's acting as the first level of resistance, if you will. Comes back down, does a little dance, touches it again. It's nudging. It's trying to get up into that upper quadrant. Can't do it. Comes back down. Now, if you take a look, we start to take out this mini swing high. In my mind, I go, okay, it seems to be attracted to this median line. What if this is a low, a significant low? Now, I might be completely full of it. I may be erasing this line in 2 bars. But the idea is, as price unfolds in front of you, you want to always be saying, whenever you see a swing high getting taken out or a swing low being taken out, in the back of your mind, you should be saying, is this meaningful, first of all? Second of all, well, if it is, what can I do with it? Well, in this case, I could have done a couple things. I could have drawn an upsloping median line from here, 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 but it's so steep, I don't want to trade off of that. We're gonna swim right out of it real quick. It's going to be meaningless. So the only other thing I can do is I can wonder if this is a significant low, maybe it'll oscillate or vibrate, if you will, at the same frequency as the median line and run between these two. Now, as I said, I might be completely wrong in 2 bars. But sometimes you'll see the market hug these on one side or the other, and if they're wide enough, they are tradable. And as I said in the beginning, this is a very wide median line. We're talking about more than 2 big figures or 2 handles in the Japanese yen. So that's plenty of room to trade. So now I watch it unfold. I still have no idea what I'm going to do yet. I'm looking for a clue that this is meaningful. Now I get 3 touches up here. You can see it continually gets dragged up to the median line, but is unable to go above. When I get the second touch down here, and price takes out some highs, I think, I think I got something here. And we'll talk about this at the very end. I'm going to show you a slide. I call this a rolling chop, and the reason I call it is price just rolls along here, and the breakout traders get chopped because they take out this high, they get long. Then this is them puking down here. Then they get short when it takes out the prior low, and now they're caught short. They get chopped on the downside. Then they get chopped on the upside, and they get chopped on the downside. That's what keeps price in this range. So if you can identify it and it's wide enough, you can trade it.